Hey, traders. Just doing a static video update on what's happened today, June 20th. We are in the last 60 minutes of trading on Wall Street before the weekend, and the most current data we have is that Bitcoin today, the buyers pushed the price up to the candle high close from December and January. And as you can see, just a failed test, a bearish back test, if you will. So with that kind of price action, we've just seen at the lows today, our lowest price since June 6th. And, you know, there's this 1026, 103 level. Once that breaks, it's going to be an easy 99.3 to 100K target from here. That would still keep us confined within the parameters of this, what seems like downsloping channel, where you now have lower highs, and maybe we eventually get a lower low than the previous low from June 5th. So that's not the price action you wanted to see. If you wanted to see imminent higher prices, I really don't think you can get too bullish on Bitcoin until buyers recapture 110.5, the previous discernible swing high. And then I think we got a real good chance of way higher prices, but that hasn't happened. You know, we had a bearish back test of one inflection zone just days ago, and now we have another bearish back test today. We had a bearish engulfing candle that occurred on the 17th. It's still active, and now it's starting to catch some fall through. So not too surprising after Bitcoin went on a 50% run in 42 days. And that's not great, right? But it's really bad for altcoins, where you know how it is. Bitcoin sells off a little, altcoins sell off a lot. And we're going to look at others.d, the market cap dominance of all crypto that is not Bitcoin. But first, we're going to look at Bitcoin dominance that today has seen its highest price or highest percentage level since May 8th. And looks like it's going for multi-year highs. We are so close. Like, how close? We are only 0.44% away from a multi-year high, 0.45%, whatever. And this, you would think the trend is your friend. It looks like it's about to continue. And if that's the case, you could see way lower prices on not just Bitcoin, but definitely altcoins. Here's Bitcoin futures. Same type of really disappointing price action at key levels. I mean, disappointing in a way, like where it is TA respect, because you're getting failed attempts from buyers to break key resistance, and then you're getting really nice checkbacks confirming, right? You got a high, a lower high, kind of a confirmation high, and then this perfect kind of tweezer top. Wow, this is definitely a tweezer top reversal at the key resistance. So now we're catching, and that's a bearish engulfing candle as well. So going for the lowest daily close since June 5th, and you would think the downside is about to 99.5, 100K, and so downside potential, it's only about 3.5% from here, but there you have it. This is not favorable price action correlation. This is the inverse of that. You just flip the chart over. You can imagine, oh, look, a key support, a spring, a back test of spring, and then a really nice tweezer bottom bullish engulfing candle in, you know, opposite world. So that is definitely what assets can look like before they go on more profound rallies or drawdowns. So just pay attention that, you know, this is not about forecasting, but we do like to identify events that occur at key levels. Here's total market cap. Nothing too crazy yet. You know, you completed that shark pattern and you've only made a lower high. You're still above the 200 moving average. But it looks like, you know, if what we are identifying on Bitcoin with the bearish back tests and the lower highs, if that's going to catch some more follow through, you would just think that 3 trillion's on deck, maybe 2.9, things get worse. Perfect shark. And you've paused, but You can see what's happening on Ethereum. This is kind of the worst kind of stuff you want to see. A 50% run in 3 days, and then a run eventually after chopping to the next resistance, 2,900, and kind of rejected that. And now, you know, you're threatening your lowest daily candle close since May 9th. And we've discussed on stream many times that the line in the sand for an Ethereum participant along would be 2407, 2400. Like, that's it. If they are unable to hold this level, the consequences are going to be 11 to 15% downside from here. So just be careful. The amount of rejections of the 200 simple moving average on the daily is nothing to ignore. I mean, that is miserable. So there is downside potential on Ethereum below this level. This is the area to watch if you care. And if you own, it's probably not a good idea to own below this level due to the fact that you're going to lose double-digit percentage points on your position. XRP still, you know, having a lot of trouble. That left shoulder head, right shoulder argument still valid. And I mean, below 214 here, you would think given enough time, you know, especially if Bitcoin's to lose 103 and head to 100, XRP is just kind of looking at 196 to 190 again. What's really disappointing about XRP for now, I mean, until they invalidate it, we still have to talk about it, right? Until buyers are taking out $2.90, this is still very real. And all they've done in the recent months is put in a lower high. And now look at it. I mean, if all stayed the same or equal in 2 days and 5 hours, it'd be the lowest weekly candle close since April 14th. So we're talking multi-month lows incoming, or multi-week lows, excuse me. So you would just think that that's probably, if Bitcoin is unable to catch any bids and we're going 100K, 190, 196 is on deck for XRP. Sorry, sucks. Don't blame me, man. Solana, that just didn't have really any sort of setup or anything promising about it. There's no action to take on it. It is, you know, this is what I'm saying. Like 135, 130, 124 were all real levels from history, and where you were just really wasn't. I mean, 141 wasn't a key level. So as you can see, we got Solana down about 6% today. Definitely a bearish engulfing candle for now being painted. 4 hours, 45 minutes till the daily close in crypto, going for the lowest daily candle close since April 21st. BNB still above the key levels, but if, you know, again, you just have to think about everything in terms of Bitcoin and what it might do, what it's looking like it might do. If we're going to be losing 102.6, 103, then you're thinking at least 621's on deck, minimum, right? Minimum downside, about 3%. If things got really bad on Bitcoin, then breaking that would have some serious consequences due to history, right? Below 621 is typically way lower in the 500s. So, yep. I mean, the argument would be kind of like, you can kind of see it, you know, like, oh, I see like candle closes like a left shoulder ahead, a right shoulder. Okay, this is potential, right? Because the neckline hasn't really been broken. I think the neckline's about 638 or 635. You know, to break that with some follow through, you got some good downside potential. So, hey, I was a little optimistic just because, hey, we're trading above key support still, and we've been doing it for a month now. But as you can just see how things are shaping up, it's looking weaker and weaker. You're now falling back below that 200 moving average. Crappy. Not great, man. Here's your others.d. This is what I was kind of excited to get to, just to keep people really grounded here in this lull of a summer we're having for crypto. You are, you know, intraday, like literally today, others.d has seen its lowest level since January 19th, 2021. We're talking over 4-year lows literally today. I mean, that's some hype in the chat stuff. To me, there's just if you look at this chart and you respect it and you care about it, you don't want to own altcoins like at all. Like there might be one anomaly. Oh, Bitcoin Cash, it was up 8% yesterday. Okay, you'll always have anomalies, but collectively, this chart should make you say, I'm good, man. This summer, I'm going to go water skiing. I'm going to go mudding. I'm going to go to the beach. And I'm not going to own like S coins like Cardano or whatever joke coin you're talking about. I mean, you have about like nearly 19% downside just to hit the next inflection point. And then if things got real bad, you'd have about 29%, 30% downside at the low end of things. So just remember what I'm saying to you. Excluding the top 10 cryptos, your tepid S coins, lowest level in over 4 years, pretty much 4.5 years now. A very bad and telling chart here. Crypto will not save the world. Switching gears to the S&P 500, just giving you a kind of broad update across the markets. S&P 500, we've been looking at this, staring at this for weeks now. This 88% retrace, this bearish bat pattern. It is maybe it's finally beginning to react. This is a magic area. If you've been watching the streams, just like when reaction, we did a poll on it. 67% of the viewing audience said we would catch a reaction here. It looks like maybe as of today it's beginning, but you just never know. You need way more follow through for a reaction to be confirmed, but you're just going for your lowest daily close since June 5th. Not really a big deal, but I'm just telling you, these are like the worst areas to be taking fresh longs on the market, because if the S&P is going to start really selling off here, typically the asset on the stock market you own will probably sell off too. So just pay attention. These are levels just like here. I mean, we were here streaming the deep crab type 2 return, and the reaction and reversal was very real. So just keeping you apprised to the market. The Dow Jones massively underperforming the S&P 500, and really not too bad today. It's flat, but you just think one high, a slightly higher high, not even able to see a 78% retrace, where we're looking at the spider. This is the 88% retrace, maybe a little higher. So, but trading below the 200 simple moving average, you'd imagine if the S&P 500 is going to react here, the Dow Jones will continue lower too. Here's your NASDAQ. I don't know why I made a watch list for recording. I must be on the wrong NASDAQ. Let me see real quick. There it is. So here's your bearish bat, just like on the spider. They're working on a bearish engulfing candle to close out the week. And I wouldn't even consider a reaction yet. You have not really done anything. It could just Monday, we could be back up at 19.7. So just pay attention. This is an area where if you were able and fortunate enough to make some money on this really nice, what was it? 35% rally in 65 days. I mean, it's never a bad idea to take a little off the table when we have the completion of W shapes. But hey, do your thing. Just letting you know about the bat. Oh, where did my oh, sorry, let me got out of whack here. Let's go to the IWM, the small caps, still holding up there, still holding above 209 support resistance. But you just imagine if the S&P 500 was to really react off that bat, this level wouldn't hold and you'd be selling off. So. But yeah, it's hanging in there, man. Definitely hanging in there. They're trying to hold on to this level back from 2021, but still below the 200 moving average. All right. Here's your gold chart. As you can see, the buyers are just unable to break that 34.29 level again. You ended up getting an actual dark cloud cover reversal pattern, and you've now caught some follow through just a couple days ago, but just hanging around, man. Still very elevated. There's been, I mean, you were just really, in actuality, just going sideways for 2 months now. And you can't really continue price discovery until buyers are breaking 34.30. But I would just the way things have been going, gold's been pretty inverse correlated to risk on and the equities market. So if that, you could just kind of think about if the reaction on the spider happened, at that bat pattern, this might actually rally higher. So it is actually performing decently well as of today. Not too far. I mean, how far off all-time highs? Just 3.7%. Wow. That breakout back test is still real for now, if you could even believe it. Silver, after breaking above a key overhead resistance from 2011, 2012, they're back testing it once. Now today they're testing it again. Certainly no area of value, but I'd imagine if they hold it above this level, given it enough time, we've had these old targets from like years ago, 37.50. And what I'm talking about, this level they're testing a support at November 2011 and September 2012 resistance. Aggressive harmonic trader would take profit at the C point and A point, so you pretty much hit that. But if they can hold this level given enough time, then your next big target's like $44, that high from 2011. So really nice long-term uptrend on silver as gold went on its run. Silver historically lags behind gold, and now silver has begun to rally while gold goes sideways. So history is kind of repeating itself here, as well as the other metals, palladium and platinum, also doing the same. Palladium's just unreal, man. And let me just get here off track. Yeah, palladium, like that is some incredible accumulation going on, and they're recapturing this part of a zone back from a long time ago. This is not the right palladium chart I have, but I would just keep it simple with it's kind of a range between $863 and $1,200, $1,250, and you can see the lowest lows were put in, and now only higher lows, more than before, coming in, and now we're rallying, and just days ago saw our highest price since November 2024. So there's something going on with metals, man. Looks like your fiat purchasing power is continuing to collapse. A lot of uncertainty, a lot of craziness going on. And yeah, I'll just the risk on assets. Let me get back to, let's just go to oil from here. U.S. oil is still in that long-term downtrend. It's been in a downtrend for a while, as it recently saw its lowest levels since February 2021. It's rallied to make its lowest high so far. This major $75, $78 level has just been regarded as resistance and no higher. But you would imagine if what's going on in the Middle East, if we have further escalation, you could almost expect, because we don't expect anything, higher prices on U.S. oil and possibly gold with the VIX spike. With the VIX spiking, that's going to just make risk off happen. So pay attention to what's happening here. There's no uptrend yet. There's no trend reversal confirmed or anything, but just a geopolitical environment is causing a nice rally off the lows. Possibly 2 hours, 34 minutes is close. Yesterday was like pretty much the highest daily candle close you had seen since like January, since the beginning of the year. So not bad, above the 200 moving average. But yeah, you would need consecutive higher highs, higher lows to turn this thing around. So here's just the U.S. 30-year yield, still extremely elevated, 4.892%. Just recently coming off of, rivaling that high back from late 2023, which was that, we had that was just right when Bitcoin was beginning its big run again. But I would think that you do not want to see the yield continue higher, man. It's very bad. You can't borrow. The trend is too good, though, so you just cannot be surprised. Do not fight the trend right now. Jerome Powell is not raising interest rates. He is not cutting. I don't think he should cut, even though I know everyone else thinks he should cut. because if he cuts, then think about the amount of inflation that's going to happen, or it's already bad. It's already, your monetary debasement's already pretty much going nuclear. But for him to start cutting now would be the maybe the final nail in the coffin for the money in your savings account. So let's just switch to equities because I'm not really a bond yield guy. So yeah, Tesla's still holding above that 313 level. There's not much here. If they can keep the price propped up above 300, 313, given enough time, you got a real good chance of running back up to the 360s again. So I mean, this is like definitely in some sort of longer term uptrend now, just a bunch of higher lows coming in. This is your actual, like pretty much your highest low of this longer term uptrend now, still trading above the 200 moving average. Tesla looking fine, man, actually is. Your cutoff, right? Because we talk about levels as, you know, your insurance policy one way or another. You probably don't want to own Tesla below $300 for too long because the implications could be way lower, but you're above all that. So Tesla's looking pretty good, man, holding up. Google, though, my God, what happened? Down 3.35% today at the lows in Power Hour, going for the lowest daily candle close since the beginning of the month, the 3rd, breaking back below that 200 some moving average. And there you go, man. That was some really nice bearish divergence that is now, I guess, catching some follow through. It's being respected. A little buyer exhaustion. That's what bearish divergence is. Implies a reversal of the downside, and you're catching that now. So, you know, and you're falling below 168, which is kind of a big deal. It looks like if they keep the price below this level too long, your target's 160, swing low, swing highs. Pretty weak because, you know, the S&P 500 on its retrace from the high to low was an 88% retrace. The NASDAQ itself, Microsoft hit all-time highs again today. NVIDIA's at that 88% retrace. So Google has been underperforming a lot of the Mag 7s and really taking it on the chin today. This is the worst performer of all the Mag 7. Here's Microsoft, as I just said, all-time highs today. But after the all-time high, they're selling into it. You're at the lows of the session. In price discovery, maybe a little bearish divergence in the RSI, but yeah, I wouldn't be too concerned. This thing, the bots have just been auto bidding on this almost every day since an incredible earnings report. So not much to really look at. I mean, if the price discovery continues, all we can do is Fibonacci from the highest point to lowest point to see $500 target. But at the same time, it may just be an upthrust. So you're working on a bearish engulfing candle today, but exceptional performance on Microsoft. Round of applause for this one. Here's NVIDIA, almost identical, if not literally identical, to the S&P 500 and the NASDAQ, where you're at an 88% retrace, completing that bat. But no follow through, no reaction yet. This is potential, right? These W shapes do not become confirmed as real structures until a reaction is confirmed. And typically that is when you see from the lowest point to the highest point a 23% retrace. So in order for this to be like a real reaction, you need to see NVIDIA at least come down to 132 from here. And then at that point we could say, yes, this is a real bearish bat pattern. So it's just potential for now, but you were just at that price reversal zone, pattern completion zone, but nothing yet. So it could continue to rally next week, no big deal. But this is a really long extended rally off the lows. I mean, 69% in 70 days. That's better than Bitcoin in performance off the lows. So, hype in the chat for NVIDIA. Not a great place to be taking fresh longs, even if it was to rally higher, just due to what we know about the 886. But okay, you know, the best time was to be, hey, look, there's a level that's been plotted. It's been here. They back tested the spring. That was the level for low risk, easy to set up stop losses, and knowing your upside potential was greater. Up here, it's nebulous upside potential and could be limited, could be nil upside. Just tough spot for someone on the sidelines wanting to long NVIDIA. This is not the best area. It just isn't. Never will be, even if it goes higher. And here's Apple that just, my God, it has been in a downtrend, but we've been discussing the neutrality of the situation where the sellers have been trying to break this very key 196, 198 level, and they just freaking can't, man. Another attempt, another failure from sellers to break it, and now buyers have come in, and now it's like up 1.65%, helping prop up the index fund, the Spider, NASDAQ a little bit, the Qs. But yeah, if this is actually held, I mean, the upside potential could be really good, but your trend has been pretty bad. I mean, like, you're making consecutive lower highs, lower lows, and now you flipped more neutral because lower highs, but kind of higher lows locally. Very neutral here, but at an interesting level. Like, I think, if you wanted to own it, fine. You better have a stop loss somewhere below 195 to protect yourself. But hey, if your stop loss never gets triggered, you could take it all the way to 216, 220. That'd be your target if you wanted to own here. So it's all about the levels. It's all about what happens if the levels break or if they hold. Here's Amazon that, this bearish divergence on stream has been identified. Impending price action, reversal to the downside. A slightly higher high with those lower levels. You're starting to see that play out, it looks like today. Going for the lowest daily close since, oh my God, June 5th, not a big deal. Still above the 200 moving average. Any pullbacks, not going to be crazy. You might see a gap fill of 193.60. We saw a 65% retrace from the high to low, so underperforming Microsoft and Nvidia, but outperforming Google, outperforming Apple. So yeah, this just happens sometimes. And here's Meta performing adequately to Nvidia, pretty much at an 88% retrace, pretty much the bat pattern, the W-shaped completion zone. And anytime you're at an 88% retrace and you see such well-defined bearish divergence on the daily, that is kind of indication that there's a slightly higher chance of down next, not up. So you're just starting to maybe react here. Because you got the W shape with the buyer exhaustion, at least on the MACD histogram. That negative momentum's building, highest level of negative momentum seen since April 22nd. So yeah, I mean, cooling off here, not a big deal. This is probably the level. It's like the worst place to be taking fresh longs, because we could be seeing 632 on deck for a test. So all right, so that is the conclusion of this analysis. I just wanted to do a static video today. Got some stuff going on later. Want to just test out static video. Streams have been rather stale lately with engagement, so just a video would probably satisfy anyone who watches. So appreciate y'all so much, and y'all have a great weekend. Until next time, respect the TA.